The first technical analysis screen recording I'm going to be doing. This is what I posted last night, our targets and some analysis using the Strat. You can see right here we had full continuity, and basically this just means that on the daily, the weekly, monthly, and the quarterly candle charts, it was implied to be in the bullish direction. Usually we want to play using the direction of full continuity. That was a big reason why I was bullish on this play. It was a double inside candle. As you can see, an inside candle basically just means that it stays within the high and the low of the previous candle before. Usually inside candles we expect a lot of volatility, especially being a double inside candle. Those are pretty rare, so I was expecting a lot of volatility from that. We can look at this chart that I charted on Thinkorswim. I had some Fibonacci retracement levels drawn here, and basically I was watching this 9 EMA to hold at support, which is at 501.83. I was thinking that if we could hold 501.83, that we could possibly test 513, not only because of the bullish continuity, but also where's it at? Oh yeah, if we check the options flow, we can see that most of the largest trades of Friday were bullish. We had a 360,000 premium there, and if we look at the ask side, it was majority calls as well. Lots of monthlies here. I filtered out intraday and same day expirations because those are obviously day trades, so this is kind of giving you more of an idea of the short to mid-term price action expected by these traders. Right here is a breakdown of the dark pool for $1 million plus premiums, and we could see it was actually bearish here, but for the 10 million plus, we see we have a lot of above ask buys, which are basically considered to be more bullish than just a normal buy. So that was another reason that I was thinking it was going to break to the upside. Let's see, let's go to TradingView. Right here is a daily chart using the Strat. Again, we had the double candles right here, double inside candles, and basically these red lines are my targets. Zoom in a little bit so you can see. So the way you basically play the Strat is you use the previous day's high as an entry for calls. So if this would have broken up above 507.62, then we would look to enter calls, and we would look to test the previous day's candle high as well as the one before that. So these are where I got my targets for the calls. And then we can also inside candle are meant to play either way. We can't always be 100% on the direction that it's going to play out, so that's why we keep mind of both of the levels for calls and puts. So for puts, we are looking for 501 to break. So if we look on this 5-minute chart, this is the morning. You can see we gapped down. This right here, this red dotted line, is the entry for puts. We opened up underneath that line. You don't ever want to chase. You could have waited for this to come back up. You see we had a big green candle right here, and then a little bit of consolidation. Then we had a 3 candle outside candle right there to break back down from the puts trigger, so we could have entered in puts again right here, especially keeping in mind that SPY gapped down over 1% today. So we could see that the overall sentiment of the market was more than likely going to be a pretty bearish day. We gapped down underneath the 50 EMA on SPY. So I had then a bearish sentiment, follow the trend. So we could have entered on puts right here at approximately 905, and these were our targets right here to look at. And you can see it actually hit every single target. You can treat these targets as well as the entry level as say support and resistance. So when this broke down initially underneath our puts entry, we would then enter puts. I usually keep a stop loss at around 15%. We can see it actually tested back above this line and got rejected pretty harshly, so it was indeed acting as resistance and our play was still valid. Hit our first target, some consolidation here for about 10 minutes, broke underneath second target, closed in between, and then we had a gap down right here for our third target. And after that, you can just see that basically could not hold and test back this second target. So this is a pretty strong resistance for intraday. So then we were watching for a continuation to hit all of our targets. Again, I got these targets from the previous day's candles lows. I know it's a little hard to see these wicks for some reason, but it's the low of this candle, low of this candle, low of this candle, low of this candle, and then a low of this candle wick. So it actually touched all of our targets, or it almost touched this final target, and you can see that it actually acted as support. This is also right around when SPY started reversing, so definitely could have been your exit entry right here. I always preach though to take profits at intervals along the way, so maybe you could have taken 25% profit at the second target hit, another 25% at the next target, and you could have let the last 50% of your position run. You can see, you're thinking basically after not only knocked out these three targets that, with the bearish sentiment in the market, that it was going to continue downwards. So then we would look for this next target. You could take another 25% profit there, or keep letting it run. You can see right here we broke through. We didn't even have a test back here, so it was still really bearish sentiment. So you could have held and held. Probably would have taken another 25% profit right around here in this consolidation phase, and then on our final target I would have tried to get 100% out of the trade. Even if it would have kept going lower, it hit all of our targets. That's exactly what we wanted. So yeah, that's how I traded, or how you could have traded AVGO today. I was busy trading SPY and Apple puts today. I usually only like to do 2 tickers at a time, so I was actually not able to trade this. But if you were to see this and had set your alerts, you could have traded this. And I'll show you the premiums for this. Right here is a premium for the $500 put nearest expiration. It's a little hard to see on this. Basically, it would normally show like this. Like, for example, this is an Apple put, and the cost of the option over today's time span. The reason sometimes, like on these very high the very costly premiums, it doesn't normally chart it like this for some reason. I believe it has to do with the large bid and ask spread, but I'm not sure about that one. But we can see that we closed underneath here. So if we were to enter right here at 905, we look over here. Where is it? It was approximately trading at $8.72 for one of these options, and it bottomed out right around 2 p.m. So let's see, right around, topped out right here at a peak of 12.4. So it's a pretty big percentage game right there. You could have played that AVGO all the way down to the bottom until we saw reversal on SPY.